let's kick into your market update. Crypto, the inflation solution. Also a plus, we're going to add in some tactical ideas to give you some navigation going forward. Now, a graph that fits what you already know, inflation. CRB, for old school guys like me, is how inflation was measured back in the day. It's still around. It's an index of like commodities. So like grains, coffee, metals, etc. Copper. CRB has been on a rope going from 100 to 220 in a very short period of time, moving like an altcoin. CRB is up against resistance, but commodities continue to break out. Now, just to give you some details, coffee exploded recently. This looks like an altcoin going from 90 to 210. Okay, for people out there who like breakfast, orange juice, along with your coffee, going from 107 to 142. These are just plain Jane commodity markets that are mooning like altcoins. Now, if you mix this with the idea that there are troubles overseas in China with stocks like Tencent and Baidu getting absolutely hammered because of new government regulations, these commodity moves may be telling you that the Fed may have to keep the pedal to the metal longer than anyone expects. The Delta variant may also play into that. So while commodities mooning is not good for me, you, and our common listener and everyone else who has to go to the grocery store, it may be a phenomenal signal for crypto, particularly if the Fed has to keep the pedal to the metal. Now, speaking of the metal, let's talk about an idea that comes from Fidelity's elite macro research unit that I pulled off Twitter. They're taking the inflation approach or the inflation idea and going back to gold in the 70s. Yes, in the 70s. Okay, I was in grade school. I wasn't there for this trade, but it's still relevant. Now, back then, gold and the gold trade was how people really hedged against inflation, and it was a huge catalyst for gold to go higher throughout the decade. So Fidelity is plotting gold in the gold line throughout the 70s from 71 to 79. And the black line, okay, is Bitcoin since the bottom near 2018. So if you can follow the graph, or if you can't, I'll tell you about it, right? It's showing that Bitcoin probably has much, much more upside, right, throughout now and maybe early 2022 before there's a corrective period, okay, before the real big up move starts 2024, 2025. Now, that's in line with some GAN research they've done, and I know you don't care about 2025 today, but the way this graph is plotted shows you that there's probably more upside in crypto in the short term, say over the next 6 months. So if there's a dip, which we'll get into in a minute, stay tuned. If there's a dip, that might be an opportunity to get on board for a much bigger trade. Now, let's talk Bitcoin tactical. 43K is resistance any way you draw it, right? This is a graph that shows you May 20th. Bitcoin was about 43K right before it sort of went dead in that range. Bitcoin's made a double bottom. It's done well, but it's coming off as of the recording of this episode. Bitcoin could either correct after hitting this 43K zone, okay, or it could go sideways when ETH and other digital assets do a big catch-up trade, okay? Now, speaking of ETH and the catch-up trade, first of all, happy birthday to Ethereum. 6 years old as of July 31st. For its 6th birthday, the universe has given Ethereum a series of 1s and 2s. What's that? Well, that's its start, stop, start stop formation that I'm always talking about on Token Metrics TV and with you, our friends on the live stream. Now, what that represents is like a coiling process. And in Elliott wave terms, once that next trend takes off, it's very impulsive, which means bulls get a lot of gratification without taking a lot of heat on longs. The catch is to catch that last two wave, right? So if you missed ETH, you might get to buy it at 2,500. If there's a dip, I would estimate that that would be good support if there's a dip. Frankly, folks, I wouldn't be shocked if there was no dip because Ethereum is just too cheap versus Bitcoin and it's too undervalued. Now, that said, if Bitcoin comes off, Ethereum might come off. And you might get it at 2,500. Below that, Christmas might be at 2,358 if there was a big washout. So on one hand, I'm talking out of both sides of my mouth. On the other hand, I'm trying to give you the navigation you need in case there's a dip. But our overall theme is that Ethereum is going to go much, much higher. Now, looking at some high market cap digital assets, Chainlink is breaking through 23. Chainlink, again, huge market cap, has the ability to drive total crypto market cap along with Ethereum and other big coins. Chainlink was actually breaking out last week after a 4-week liquidity event where Chainlink shockingly was pushed down to 15, where no doubt much larger players took anything that any smaller players had to sell and put it away for a long, long time. So remember, Chainlink was a huge leader in the market back in August 2020 when small digital assets in the lending and trading space took off. Polkadot, everyone loved it at 48. Everyone hated it at 12. This is my running joke about Polkadot. Polkadot is Web3, and I have absolutely no idea why everyone gave up on it. At the top, it was 61% above its Gann trend line. That's sort of my homemade gravy version of what Forrest does on a more scientific basis. At the bottom, Polkadot was, drumroll, 61% below my Gann trend line. Now, Polkadot, as you can see on your screen, is having a big green day, is taking out 1969, right? And that would be an indication that the layer one big cap coins could start breaking out one by one. I don't have a Cardano chart, but Cardano fans are out there. We're glad you're with us. Okay, Cardano could be next. This could move total crypto market cap a lot, especially if there's one more dip in ETH before it takes off. Okay, the more they wind up that spring in this sort of alternative coin universe, the higher it can go. Now, again, total crypto market cap. Right now, about 1.6 trillion. Okay, my work shows it can head towards 1.8 trillion and is eventually going to make a new high. So I don't know that you have to FOMO in, okay? But to quote Mike Novogratz, if you're not long, you're short, which is a nice way of saying, you know, you should have some crypto, but don't FOMO in with all of it because there may be one last dip to get in. So save some chips, but the overall outlook is constructive. The only question remains, how big is the next dip and where can you grab it? Okay, now, speaking of smaller cap digital assets, we've been talking about perp for a while. A lot of positive catalysts here. Binance having trouble with European regulators on derivatives. Decentralized derivatives, as you have heard me go on and on and on and on, could be a huge underreported theme in crypto. Perp traded in a wild range, somewhat annoying, but never really crashed the way other protocols did in May and June. Perp is above 13.8. I own Perp as a disclaimer. Fibonacci extension levels above the market are 25 and 39. One final note, perp has done that start, stop thing. So we're looking for that, big three-wave gratification. If 13.8 holds, and I hope it does, during any Bitcoin correction, then this could be another sign that, perp is strong enough to try to go higher. Now, a coin we've covered that, was very disappointing for a while, Alpha, is starting to show signs of life. There's a teacup and handle formation, okay? And Alpha has resistance around 71 cents, and if it breaks out, it could be 86 cents as the next resistance. Overall, the teacup and handle formation could result in digital assets like Alpha doing much, much better short term. So, in sum, Nano, the future of money. Notice I've been trying to end all the live streams and Token Metrics TV episode, always trying to remind viewers about the future of money. July 28th was 264 days from the November 2020 low in Nano. 264 days is a Gann number. We've been experimenting with multiples of 6. Nano's got a little bit of a bid to it around 4-ish, and Gann trendline analysis shows upside potentially up to 12 if it gets going. I know you like alternative digital assets. I know we're very constructive on Ethereum. Everyone seems to focus on Bitcoin, rightly so. However, don't forget about the nanos and don't forget about the dashes. There are positive catalysts here, and going back to orange juice and coffee, people need a solution and institutions know it. So the same people that took to crypto that everyone was puking in May and June may also be preparing for the future of money trade, and Nano could be a part of that. So stay with us, stay with Token Metrics. TokenMetrics.com and Token Metrics TV will keep you tuned in, and we appreciate you being with us today. And that's the market update.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at TokenMetrics.com.